Hello there. Welcome back to Financial Accounting at 5. In this video, we want to look at a question from the question paper of November 2023. This is question 2 on that question paper. And this question is on partnership, on the preparation of a financial statement, which is the statement of profit or loss and other comprehensive income. So this is what we have on question 2. And it reads, you are provided with a pre-adjustment trial balance of partners, Nitro and Petro, ending on 28th February 2021. So we are given there, that is a trial balance with a list of balances that we are given there. So we can go down to check what else do we have beneath that trial balance. If you go down, this is the information that we have. And then we have got additional information in terms of adjustments. And we've got additional information that is running down after that trial balance. And we've got a note there taking into account that new equipment with a gross carrying amount of 20,000 rands was bought on September 2020. So our calculating depreciation, we have to take note that there's an equipment that was bought during the year. So we need to calculate the depreciation of this equipment and then make equivalence in terms of the number of months that this equipment stayed in the business. And then we can calculate now the total. That is, now we add the depreciation of the new equipment according to the month that it stayed, plus the old equipment that stayed the whole year. And we get the total depreciation for that equipment. Then we can go to the next page to see what we have. Then I would see that here also the additional information is continuing. We have additional information going down. So if you go down, you would see that this is additional information that we have up to the C. And then beneath that, we have prepared the following in the books of partnership of Nitro and Petro. At 2.1, we need to prepare a statement of profit or loss and other comprehensive income of Nick Pet Traders for the year ending 28 February 2021. Then on the part 2, it needs you to prepare the statement of changes in equity of Nick Pet Traders for the year ending 28 February 2021. So obviously, you're going to start on 2.1, whereby we are preparing the statement of profit or loss and other comprehensive income. So if you go to our answer section, you'd see that we have got a prepared statement of profit and loss that we have there. Then we can just try to see what we can put as the initial figure. So let's just try to see what we have there. So we have got our 2.1, which is a statement of profit and loss or loss and other comprehensive income of Nick Pet Traders for the year ending 20th February 2021. So obviously, the figure that we are going to start with is sales. We are going to start with the figure for sales, and then we can go to our question and try to look in the list of balances what figures do we have for sales. So here we can just indicate that we are going to include our sales there. Then we go to our question. So if you go up the our trial balance, there we've got a figure that we are given for sales there. So if you come here, you'll see that we've got sales here, which is 1,186,300. Then we check if you've got any data allowances in the question, that is our sales returns or returns inwards. Those are going to reduce the amount for sales, and then we're going to put the net figure for sales there. So if you go down, you'd see that we have our sales returns here, 10,400, and then we got our sales figure, which is 1,186,300. So we are just going to summarize the working brackets that we are going to say 1,186,300 minus 10,400. Then the net figure will represent our turnover, which we are going to represent as our net sales. So if you go to our question, we are just going to summarize as such. Here now we are saying the brackets 1,186,300. And then you subtract your sales returns, which is 10,400. Then the net figure, you can put it in this column. This is now the answer there. It's supposed to be 1,175,900. So let's try to see. Let's try to calculate there and see what figures we get. If you say there we get 900, so we have got 900. So this is what we have. So after that, we are going to straight away to go to the section of less costs of sales. And let's just take note that whenever we say less, we are subtracting. So it means the figure for cost of sales, we are supposed to subtract it here. So we can just go and check what figure do we have there for cost of sales. But remember, this cost of sales we are given it here is 677,888. But in some questions, you won't be given it as calculated as this, which means you have to put that formula which says which explains calculation of cost of sales, whereby we say cost of sales is cost to opening stock. We add purchases. We subtract purchase returns if they are there. We add any carriages if they are there, carriage inwards. Any import duties if they are there, we add them. And then finally, we are supposed to subtract our closing stock. Then we get your cost of sales. So in this case, we have it as one figure, so we can just take it as it is 677,888. But before you put this figure, you need to go to additional information to check if you've got any additional information in terms of adjustments that is affecting cost of sales. But if you go through this question in terms of the adjustment section, you'll see that there's nothing that is affecting our cost of sales. So we are supposed to pick as it is, which is 677,888. So if you go back there, you'd see now here we are now saying cost of sales. So here cost of sales, and the figure that we have is 677,888. So this is what we have. So we are saying less here. So it means here we are subtracting. And then if you subtract here, we say 1,175,900 minus 677,888. The answer is supposed to put it in this column, which is now 498,012. And you see that we are getting a positive figure there, meaning that our sales are greater than our cost of sales. So if we have such a scenario, it means our figure that we get here is now the gross profit. Here we have got our gross profit. So in some cases, you might see that the figure for sales might be less than the figure for cost of sales. In such a case, it means you're going to get a negative figure here, which means you're going to indicate it in brackets to show that it's a negative figure. And here we don't call it gross profit, it's now gross loss. So when you get a negative figure, a negative balance here, it's supposed to be our gross loss. So from there, we go to plus other income. We check for any income that we have in the question. So we have already indicated that we are saying plus, which means we are adding. So it means our other incomes and the total that we are going to get for all incomes, we are supposed to add it to our gross profit. So you would see that in the question, most questions, we have got many incomes that will be in the question. So we are just going to go through all the information that we have in the question and check other income that we have in the question. So if you go there, you can go to the nominal account section. That's where you can find your incomes. So if you go there, you would see that let's go down to check other incomes. We have got interest on fixed deposits, which we are having here. So interest on fixed deposit, we are given it as 5,000. So you'd see that all incomes have got negative, have got credit balance. So there will be on the credit side. Remember, this is our credit side, and this is our debit side. So our incomes usually they are always on the credit side, and then our expenses we find them on the debit side. So on interest on fixed deposit, we are given it 5,000. So what does it mean? It means this 5,000 is the amount that we received as interest on fixed deposit. So it doesn't mean it is the amount that we are supposed to input in the statement of profit or loss. Why? Because we are supposed to comply with the matching concept or the principal concept. Remember what the matching principle says, or the accruals principle says. It says what belongs to this year should be recorded this year, and what doesn't belong to this year should not be recorded this year. So this amount only indicates the amount that was paid, but it doesn't tell us which amount was actually supposed to be charged to be received for that year. So we can only see that the actual amount that was supposed to receive if we go to check in terms of the fixed deposit amount and then the interest on fixed deposit. Then you calculate the interest, then you compare it with this 5,000. Then you can only be able to see if the amount that we received is equal with the amount that was supposed to be received, or we can see that the amount may be greater than this one, which means there's an accrual there. If it's smaller, it means we received more than what we're supposed to receive. So it's a prepayment of an income. So we can go to check in our list of balances. Above that, we have got a description that we have of fixed deposit there, and see what is the amount and what is the percentage. So if you come here, you'll see that we've got fixed deposit here. We've got fixed deposit here. and it has 50,000, and the interest is 16% per annum. So what does it mean? You come here, 16% is 16 over 100, and then you multiply by 50,000. So if you calculate that, you see that the amount that you are supposed to get there is 8,000. So here we get 8,000. So it means this is the amount that relates to this period that was supposed to be received. Then you compare this 5,000, you see that we received less than what we were supposed to be received, which means it's an amount owing. It's an income that we are supposed to receive. It's an accrual of an income. So as we are representing it now in statement of profit and loss, we are just going to show that there was an accrual there. So we are seeing that the amount that we are yet to receive is now 8,000 minus 5,000. So we are yet to receive our 3,000. So in our statement of profit and loss, we are going to say 5,000 plus 3,000, and then it will lead us to 8,000 that we are supposed to receive. So I will go there and just summarize it as such. We are now here. We are now saying this is now interest on fixed deposit, or we just say interest income. Then in the brackets, we show that 5,000 is the one that we received, but there's an extra 3,000 that we're supposed to receive. And then this will give us a total of 8,000. So this is what we have. Then we go back there, check any other income that we can find in the question. So we can go again on the nominal account section and try to see what else do we have. So after interest on fixed deposits, let's just try to see beneath that if we have got any other. So you see that we have got also rent income here. Rent income is here. And we are seeing that the rent income that we received is 23,500. But we go to the additional information to see what is there anything to do with rent income. We check if you have got any explanation in terms of rent income. If you don't have anything that is explaining about rent income in the adjustment, which means you are going to pick the 23,500 as it is and put it in the statement of profit and loss. It means we received the actual amount. Sorry, we received the actual amount that we are supposed to receive. So we go to adjustments, we go item by item, checking if you've got anything to do with rent income. You see that we've got nothing here. Go to the next page to check again anything about rent income. So you can start from where the page is starting. Right, what the first item that we have there is saying a tenant moved into the building on 1 July 2020. Rent payment was set at 2,350 per month and will increase by 10% every year on 1 December. So we are seeing that the rent started to be received on 1 July. But if you go back and there to check our financial year, it's also important for you to identify the financial year where it's starting and where it's ending before you answer the question, because this will help you in calculations of such adjustments, whereby you've got payments or receipts that are paid during the year. It means you have to calculate the number of months that are appropriate for the calculation. So if you come here to see that it's the reason you are provided the pre-adjustment trial balance of partners, Nitro and Petro, ending on 20 February 2021. So what does it mean? It means that our year is ending on 28 Feb 2021. So it means it started on the previous year, which is 1 March 2020. So this is our financial year. So if you go back now to see in terms of this receipt of rent, you'd see that we started receiving it on 1 July, which was during the year. So we calculate the number of months that this rent was supposed to be received. So we have July, the whole of July, August, September, October, November, December, January, February. Then you count how many months are there that are applicable to this rent. 1, 2, 3, 4, 5, 6, 7, 8. We have got 8 months that were supposed to be received for this rent. Then we are told that on 1 December, the rent is supposed to be increased by 10%, which means the months after the increment, we have the whole of December, January, February. So you got 3 months after the increment of the rent, and then which means this is after increment, which means before we are just saying total, which is 8 minus our 3, we will get our we get 5 years, which means 5 months relate to before the increment, and then after the increment we have 3 months. So, but after the increment, we see that the rent will be 10% higher. So it means we are supposed to multiply this 2,350 times 1.1, whereby we are going to add 10% to the 100% of 2,350. So basically, what we are saying now, we can just maybe try to come up with a formula there. Let's just say here we are saying here before the increment we have got 5 months. Sorry, 5 months. So we are saying 5 times 2,350 per month. This is before. Then after we have 3 months. So we are saying 3 times 2,350, but the rate was increased, now increased by 10%. So we are saying 100% before the increment plus 10% after to give you 110%. So as a decimal, 110% becomes 1.10. So here it means you are also multiplying by 1.10 because it had increased. And then you get your the answer that you are supposed to get there will now indicate the total rent that was supposed to be received. Then we are going to compare it with the rent that we are given in the list of balances, and it will give you if you've got a prepayment or you've got an accrual. We'll see when you find this total that was supposed to be received. So you are supposed to solve this. Now we are saying 5 times. You are now saying 5 times 2,350. Are you there? You are supposed to get 11,750. So here we've got 11,750. Then we add here. Here we are supposed to multiply again 3 times 2,350. And then we add also 1.1. So you also multiply by 1.1. And then you get your 7,755. Then you add the 7,755, then you add 11,750. And then you get 19,505. So it means this is the rent that relates to the period. This is the rent that relates to the period. Then you compare it with the figure for rent that you are given in the question that was received. This figure that we have in the trial balance is the figure for rent that was actually received, but it doesn't mean it's the actual that was supposed to be for that period. So you'd see that for rent income, we have 20,500, 23,500. So 23,500, you'd see that it's greater. Let's compare it. It's greater than this one. It's greater than this one, 23,000. We have got 23,500. So it's greater. So you'd see that if it's greater, it means we received more, which means this is a prepayment. This is a prepayment of income. So the amount of prepayment now we're saying 20,500 minus 19,505. And then we subtract there, you get 3,995. So it means there is a prepayment of a rent receipt of 3,995. So this prepayment that we have by the tenants, it means we are going to indicate it and provide it in the statement of profit and loss by saying we are going to say 23,500 minus 3,995 to give us the actual amount that was supposed to receive, which is 19,505. So we are going to just indicate it as such in the statement of profit or loss. So if you come back here, we can just indicate it as such. Right, so we are now saying this is our rent income. So we are saying rates. So in brackets, what we are saying 23,500. This was the amount which was greater than what is supposed to be received. Then we subtract the extra amount that was received, 3,995, and then you get the actual that is supposed to be for that month. Then which is 19,505. So this is what we have. And then you go again to check if you've got any income in the question. So if you come here, you would see that after rent income, we will only have telephone. So it means telephone is an expense, so you're not going to put it under income. But you'd see that we've exhausted all the incomes that we are having on the nominal account section. You also go to additional information to check if you have got anything again that can be income. But remember, after you've exhausted the nominal account section, you have to check for uh, a surplus on the valuation of inventory, which is inventory surplus, can be on also in income. We also look for provision for credit losses or provision for bad debts. We can have a decrease. If it's a decrease, you're supposed to put it under income. And also you need to check for any other income that can be there in the additional information. So I will go there to check if you have got anything. So on the first part, you see that inventory on the end of 2021 reviewed the following inventory, 1,000 rands, and then which is stationary, 520 rands. So the one that we are concerned with in terms of surplus of inventory is the one which will be indicated as inventory, which is only 31,000. So what we do, we compare this figure that we have with the figure that we are given in the trial balance, check if they are the same. If they are not the same, it means there is a surplus or a deficit. If it's a deficit, we put it under expenses. But if it's a surplus, put it under income. So if you come here, just go up to see the figure for inventory that we have. Inventory here, we've got 29,000. So we have 29,000, and we compare it with the additional information figure. 29,000, you compare it with 31,000. It means after counting, the book value is 29,000. Book value is equal to 29,000. And then this one is for the stock count, physical stock count. This one is the physical stock count that we are having, which is 31,000. So it means when you counted, we found inventory which is more than what we have in our books. So if we have such a scenario, it means it's a surplus. But if this physical stock count is less than the book value, it means it's a deficit and it goes under expenses. But in this case, it's greater, so it's a surplus. So it goes under other income. So the surplus is 31,000 minus 29,000. So we can go there to just indicate that we are now saying inventory surplus, and we are saying it's 31,000 minus 29,000. We calculate that we get 2,000. So here we've got 2,000. So we go again to check for other income. You are now in additional information, which means you are going to go down or additional information. Check if you've got anything that is explaining. Remember, we can also have provision for credit losses or a provision for bad debts. And there, check if it's a decrease or an increase. So go there if you have got anything to do with provision for our bad debts. You'd see that we have got nothing there that is showing us about our provision. We go back there. So you'd see that we have nothing. We only have this one, which is trade receivables. Mr. B, trade receivable, Mr. B disappeared, and this account of 230 must be written off as recoverable, which is this one is a bad debt or a credit loss. So it means we are supposed to put it other expenses, and we have nothing again that is showing us. So in that case, it means we don't have any other income that we have in the question. So we go back there and see, add all the income that we have. Total is supposed to come here in line with plus other income. So we add there. So the total that you get there is 29,000. Sorry, you're supposed to get 29,505. So remember, we are saying plus here. So we are adding 29,505 plus 498,000 in top. And then the total is supposed to come here as our gross income, which is 527,570. And remember, this figure now is in case of gross income for the year. Right. Then we can go to the expenses section. So we are now saying less distribution. Here we are now saying less distribution. Less distribution. We have distribution and administrative. And other expenses. The total you're supposed to put it here, but in this case, we are supposed to list all the expenses that we have beneath that. So where can we find them? We go to the list of balance, that is trail balance, and check on the nominal account section all the expenses that are listed there. So we can start from the beginning. Remember, sales it's not part of expenses. Costs again, sales 10, we go down, we see that we have got stationery. This 4,600 represents stationery that was bought. But the figure that we are supposed to put as an expense in the statement of profit and loss is not the figure that was bought, but the figure of stationery that was used. So out of 4,600 that was bought, what amount was used? So we can see that in the additional information. So you see that here we are given inventory of stationery at the end, 520. So it means out of 4,700 rands of stationery that we bought, at the end we have 520 that is remaining. So what was used is 4,600 minus 520. Then if you calculate that one, you're supposed to get 4,080. So basically, that's what you do there in terms of calculation of stationery that was used. Then you go back to just summarize that. We are now saying stationery. The brackets show the working. Remember, we said for stationery, we said 4,600 minus 520. And then you're supposed to get 4,080. So this is what we gave, and then we go and check again other expenses that we are having. After stationery, we've got wages, 24,400. So for our wages, 24,400, we don't put it as it is. Remember, this indicates the amount of wages that was paid. So what you are supposed to do is you are supposed to go to the adjustment section and go through all adjustments to check if you've got any adjustment that is affecting our wages. If you do not have anything in terms of adjustments that is affecting wages, you are just going to pick 24,400 as it is and put it in the statement of profit and loss. It means there was no adjustment. It means what we paid is what is relating to that period. So we go there in additional information to go and check item by item. If you've got anything that is affecting our wages, you'll see that we have got nothing there. The first page, we go to the next page. Again, item by item, we go down. We've got the partnership agreement there. It doesn't have anything to do with our wages. We see that we are now to the end. So it means we've got nothing that's affecting our wages. So we are picking the figure that we're having in the trial balance there and put it as it is, and we just check the figure. It's here. We have got 24,400, so we're just going to pick it as it is. So we are coming here now. We are saying wages, and we are saying the figure that we have is 24,400. So we go again to check any other expense. After wages, we've got water and electricity, which is 39,300. Again, we do the same. We check if you've got anything that is affecting our water and electricity. Additional information, we go down, checking item by item. Go to the next page again. You check again, item by item, you go down. I would see that there's nothing that is affecting our water and electricity. So what does it mean? You pick the figure that you have there as it is and put it in the statement of profit and loss. So you've got 39,300 for water and electricity. So if you come here, you are now saying water and electricity, and with a figure of 39,300. So this is what we have, and then you also go and check other after water electricity. We've already come, we've already adjusted under income. Telephone 10,700. Also, we do the same. We go to additional information, check if you've got any adjustment that is affecting our telephone. We go down. We have nothing here on this page. We go to the next page. We go up. go down to see for any adjustment affecting telephone. We see you've got nothing. So we go back again. We pick the figure that we have for telephone, which is 30,700, and put it uh, in our statement of profit and loss. So here we are saying telephone, and we have 30,700. And then we go back to check again. So according to our nominal account section, telephone is the last item. So it means we've got no other item there. So after we've exhausted so under the nominal account section, it means now you go to the additional information to check anything that is mentioning an expense that is not included there in the trial balance. Remember, we've got depreciation. We can only find it in the additional information. We have it here. There is depreciation must be provided on equipment at 10% per annum according to the straight line method. But then beneath that, we are told that there is an explanation of note there, which is saying, take into account that new equipment was with a gross carrying amount of 20,000 rands was bought on 1 September 2020. So we've got equipment that was bought during the year. So what does it mean? It means we've got old equipment and new equipment. New equipment is the one that was bought during the year on 1 September 2020. So we can just count the number of months that that equipment stayed in the business for that financial period. We have the whole of September, October, November, December, January, February 2020. It's now 2021. So we count the number of months there. We have 1, 2, 3, 4, 5, 6. We have got 6 months there. So here we are saying it's equal to 6 months. So it means it stayed 6 months. This equipment of 20,000, we are seeing that the percentage is 10%. So basically, let's just calculate its depreciation of the new equipment. We are now saying depreciation of the new equipment. We are now saying 10% is 0.1 as a decimal times our 20,000, which is the amount. Remember, it's straight line method. And then you multiply by 6 months, 6 over 12. Remember the formula for straight line method, we say percentage times cost. And our cost here is being represented by the gross carrying value here, which is 20,000. So percentage is 10%, which is 0.1 is a decimal, times 20,000 cost. Then we get the annual depreciation. Then we reduce it to 6 months. That this equipment stayed times 6, the 6 months that is stayed over 12 months for the OA. Then you get your amount there. So if you calculate there, you'd see that you are going to get 1,000. Then now we go now to the question to see the amount that we have for equipment for cost, so that we can calculate the cost of the equipment, that the old equipment that stayed for the whole year. Remember, we've got 20,000 that came on 1 September. So we need to subtract it from the amount that we are given in the trial balance. Remember, the figures that we are given in the trial balance are at the end of the year. At 28 February 2021 was the end of the year, which means that 20,000 that we have there is inside the amount that we have for equipment of 60,200. It's inside this amount. This is the amount that we have for equipment at the end of the year after adding the 20,000. So we are going to say 60,200 minus 20,000 that was bought during the year. You get your 40,200. Then the percentage is 10%, and we are saying 10% using straight line method. Straight line method, we are saying percentage times cost, and the cost that we have for the equipment that's said for the year is 40,200. So we are also going to say 10% is a decimal 0.1, then you multiply by 40,200. And we see if you multiply that, the answer that you're supposed to get there, let's just try to see, you're going to get 4,020. 4,020. So this is what we have. So remember, this is now the figure for equipment that stayed for the whole year. The depreciation for the equipment that stayed for the whole year. And then we've got that equipment that came during the year, which is a depreciation of 1,000. So what we are saying now, we are adding this 1,000 plus 4,020 to get our total depreciation. So basically we are saying 4,020 plus 1,000. Then we get your total depreciation for the year, which is now 5,000. and 20. So this is what we have for depreciation. So we can just go there and summarize that. We are now here, we are now saying depreciation. So in brackets, we are now saying 4,020 plus 1,000. And then the amount that we are going to get 5,000, 5,020. So this is what we have. So we can now go to the question again to check on additional information. Remember, we've identified depreciation on other information. That is our adjustment section. So we can also try to see if we have got anything again that is a part of our expenses. So we go down, go to the next page to see what we have. Right, you see that we have nothing there, but we have got something that we have at the beginning of the year. Sorry, at the beginning of the additional information, we have this description which saying trade receivables for Mr. Bean disappeared on his account of disappeared, and his account of 230 rands must be written off as irrecoverable. So it means this one is a credit loss. This 230 indicates a bad debt or a credit loss. So what we are saying, we are just going to pick it as it is and put it there in the statement of profit and loss and expenses as a credit loss. So we are going to put it here and say we have the credit loss. This is a credit loss, or we can call it a bad debt. A bad debt meaning this is a person that we sold goods to on credit, and this person can no longer pay the amount back. So we are supposed to remove it in our books and represent it as a credit loss or a bad debt. So the amount that we have there is 230. So this is what we have in terms of all the expenses that we have in this question. So we can now add there to get the total for expenses. It means now we are adding 230 plus 5,020 plus 10,700 plus 39,300 plus 24,400 plus 4,008. Then the total will come here in line with the description of distribution and administrative and other expenses. So the answer that you are correct answer that you are supposed to get there is 103. 103,730. And remember, we are saying less here. So it means we are subtracting. So what are we saying? We are now saying the figure for gross income that we have minus the figure for expenses. 527,570 minus 103,730. Then the answer that we get now is our net profit. Let's just see. Here now the answer that you get there is supposed to come here, and it's going to indicate our profit for the year. So now we are saying our profit for the year and the answer that we are getting there is 423,787. This is what we have. So remember, according to the question, we might also have our interest expense, which is our interest. So here we are supposed to say less finance costs for the year. So you go through the question to see if you've got interest there. If there was a loan or a mortgage that is there, and then you check the interest on the mortgage, you calculate the interest, you put it here as our interest. But according to the question, we don't have it. And then after that, you might have other comprehensive income. Which if we have them, you're supposed to add them there. For finance costs, we subtract. Then for other comprehensive income, you're supposed to add, but we don't have them again in the question. And so after that, you go to the section of total comprehensive income for the year. Total comprehensive income for the year. Which in this case is just the same amount that we have for profitable day, because we don't have this section. So the same figures will come here. So this marks the end of our statement of profit or loss. So this is what we tells of our statement of profit and loss. Let's just stay tuned for the next video that is going to come, which is the video on statement of changes in equity. As for this video, I'm signing out.